Australian Wealth Advisors Group is a diversified wealth management company investing across corporate activist investment funds management and financial wealth management and advisory. In FY25, the company reported 13% revenue growth, a $1.2 million profit before tax, and $2.3 billion in funds under management, and says it is now well positioned for further M&A activity. Ahead of Tip Group's Emerging Wealth Winners Small Caps Conference, I'm joined by Executive Chairman Lee Iafrate to discuss the company's growth strategy and role in the rationalisation of the financial services sector. Lee, welcome back to the Stock Network.
And thanks, and great to be here.
Now, the company operates across three key divisions: corporate activist investment funds management and financial wealth management and advisory. What did your last results presentation highlight on how these chapters are contributing to the company's growth and also ability to generate value for shareholders?
Yeah, thanks, Lel. So our first full year results were released, and the board was very pleased to come in with a result of 1.2 mil of net profit before tax. We have a very, very active pipeline of acquisitions focusing on our two chapters that we are seeking to build out, being wealth advisory and the funds management. So in both of those two chapters, as I said, we've got quite an active pipeline of strategic investments that will roll out and are focusing on building up that net profit before tax number. The board's got a very clear number in mind as what we want to get to within 2 to 3 years, and we think that that's fairly achievable. The first chapter, being what we call a more glamorous sector, is the corporate activist division. That's harder to predict with profits and how they're going to turn out, because it revolves around the successful completion of takeovers and strategic investments. Last year we had 2. This year we have 4 in the pipeline, or we have 4 strategic holdings, which I'll touch on in a minute. But as and when they'll drop through, your guess is as good as mine. But they're great tickets in tats to have, and they bring in very nice results for shareholders.
Great to hear, Lee, and also about those strong financial results. And I mean, given a very active market for M&A, how is the company now positioning itself to capitalise on sector consolidation, also strengthening your long-term growth trajectory?
Yep. Good point there, Lel. We've advised the market that we have one strategic investment, which is a 15% shareholding in Centrepoint Alliance. Centrepoint Alliance is the 3rd largest owner and operator of authorised reps in Australia. It is very strategic in the universe. It's important to understand the universe. There's only now 5 or 6 listed companies within the advisory and wealth management space. Those 3 can own and operate close to 2/3, probably not say 2/3. There's about 8,500, this is the best way to put it, there's about 8,500 licensed financial planners that do the whole kit and caboodle. There's another couple of thousand which are stockbrokers, accountants, paraplanners, which gets the total up to about, 11 or 12,000. That's all it is in Australia. But of that number, you've got about 8.5, maybe pushing close to 9, that are the full service financial planning advisor. Of that 9, close to 3,500 to 4,000 are within the 4 to 5 listed companies on the ASX. So this is a once-in-a-lifetime opportunity for anybody, both foreign or local, to do the final leg of the consolidation of this wealth advisory industry. And whoever was able to achieve that will own up to half of the advisory pool in this country. It'll never happen again. It is such a strategic asset and an opportunity that exists. We just can't believe our luck. So our role is to be front and centre in the determination as to how that pans out. So we have, as I said, a 15% shareholding in the 3rd biggest player. The first biggest player is AMP. Most likely it will go at some point in time. The other one is IWF. It is now under takeover from two foreigners. So once those two go, which is most likely, you are then left with this small listed rump of which we're now playing in. So we have, as I said, one holding in one. We have two holdings in others below the 5% substantial shareholder level, because we haven't disclosed to the market just yet those positions, and we're keeping those up our sleeves until the appropriate time. So a little bit of company benefits for us and for our shareholders. But no doubt, we anticipate that within the next 1, 2, 3 months, there will be a move, and it'll only take one to move. It'll be just the dominoes. As I said, there's only 6, so it won't take long to fall, and then that'll be that. So we're working diligently behind the scenes with the other 2 or 3 that are listed at creating the one-stop shop, big listed play. The value of that for a foreigner or for a local player is immeasurable. It'll be the only game in town. The rest are cottage businesses spread throughout Australia. It'd be very difficult to try to, well, it's not very difficult, but it's very cost potentially inhibitive to bring all of those little cottage businesses in together. But from a listed play, this is as good as it gets.
Well, Lee, thank you so much for outlining the opportunity for Australian Wealth Advisors Group, and look forward to seeing you at TIP Group's Emerging Wealth Winners Small Caps Conference this month.
Look forward to seeing you there, Lel, and thank you very much, and best wishes to all of your viewers and clients.